Joining us now in an exclusive interview is CME Group Chairman and CEO Terry Duffy. Welcome back, Terry. Good to have you.
Thanks, Sarah. Appreciate it.
Clearly, it's been volatile in the rates market, more so than even stocks. How's that affecting you?
Well, I mean, obviously, to a very positive effect for us. I mean, there's so much stuff going on in the rates market today, Sarah, as you all know, you discuss it constantly. But, you know, if you could take this back even just a few months and see where a lot of this stuff started, especially with duration risk, I think there's been so much of an opinion that, you know, I heard Carl talking before the break, you know, central banks are potentially pausing, but the rates market continues to move. So, you know, duration risk is a concern, so no matter how small or how big you are, and people need to mitigate and manage that risk. And for CME, we're seeing the benefits of that, and that's exactly what they should be doing. Also, with the issuance, Sarah, you know, there's going to be a large issuance continuing to come out, and the traditional buyer of that has been the Fed, and the Fed's not buying, as we know. So if the Fed's not buying, the Fed doesn't hedge, that means other people are buying, and they do need to hedge, going back to what I just said about duration risk. So if you're buying government treasuries today and you're not going to hedge them, and you're not the Federal Reserve, that could be a very risky proposal.
So do you chalk this move in rates up to the concerns about supply and demand of Treasury issuance?
Well, I think it's important to talk about the supply and demand of treasuries, because you're starting to see other asset classes catch a bid. Like you see Bitcoin right now, you know, just below 35,000. I'm not saying people are leaving treasuries and going to crypto, but there appears to be more than just an ETF announcement from BlackRock and DTCC. It's got to be some people diversifying. You've got gold just under $2,000 an ounce. You had oil come up, but it sold off. I think people are diversifying away from some treasuries, and that's part of the equation. So, yes, that has a massive effect on the supply.
Terry, I know there's been some on the street that are calling for you to find ways to generate revenue if and when rate volatility backs off. I mean, do you see that day coming? And if it does, what then?
You know, Carl, I'm not going to speculate on that. Right now, when you look at our business, 80% of our revenue is derived from transactions. You know, we've been sitting here for the last several years talking about rate markets. We have a rate market right now. We have the most uncertain world that we've ever seen on the planet. We're here to mitigate and manage risk. We are in a strong sweet spot. As far as looking at other reoccurring revenues, I think what you're referring to is a recent article about would we do something from an M&A perspective to get reoccurring revenue. We have reoccurring revenue, Carl. It's called trading. And right now, that doesn't seem to be going away for the foreseeable future. So I think we're in a really sweet spot. And when you have operating margins of 70% associated with that transactional revenue, that's a pretty good business that a lot of people like to be in.
So you don't have to go buy the CBOE, which I think is really what the article's about from Reuters.
Well, that's what it's about, but as the article suggests, and the headlines are deceiving, Sarah, and unfortunately people only read headlines in the world that we live in today, but if you read the body of the article, I said what I've been saying for years, that we are in the strongest position of any institution that looks like us to do M&A deals, and there's going to be a lot of people shopping those deals towards us, and it doesn't mean we're going to acquire them. I will never do anything that does not benefit the users of my marketplace or my shareholders. So I'm not going to look to do deals just to do deals. I was only referencing that our EBITDA is less than 1 times where our other competitors, if you want to call them that, they're multiples higher than that. So that was all it was, and I think sometimes the headlines are deceiving.